Today, a whole bunch of Unreal with Tarric Brooker. Hello again, it's Martin North from Digital Finance Analytics. Well, that is post covering finance and property news with a distinctively Australian flavour. Friday afternoon, and journalist Tarric Brooker's with me again. Hi, Tarric.
G'day, Martin. How are you, mate?
I'm very good, and good to see you back. I tell you what, we missed a couple of weeks for various reasons, and your fans were baying for you to come back.
Well, I'm very gratified to hear that people are so pleased to see me on your channel, and it's, what can I say? It's nice to have fans. I never thought I'd have any.
Yeah, well, they were definitely wanting to see more of you, so it's great to see you back on. And look, every time we seem to chat, we say, "Gee, it's getting messy," but gee, it's getting messy, isn't it?
I think that's just the way of the world at this point, isn't it? You know, there's always something happening, and with everything, with the way things are distorted by government, by central banks, it just gets messier and messier, unfortunately.
Yes, and again, maybe a good place to start briefly is Jerome Powell last week, right? Because before the Jackson Hole virtual event, a lot of people were expecting him to come out with a ta-da, this is what we're going to do with tapering, you know, this is when interest rates are going to be lifted. He had none of it. He basically said nothing more than we already knew, right? Which is, we'll watch the metrics and see what happens.
I don't know why people were expecting more, to be completely honest with you. You know, Powell is an extremely dovish figure. There is a lot of uncertainty that still remains. And I don't think that he wants to be seen as the person who blew up the US economy, even though it's doing a pretty good job of that all on its own.
Well, you could argue that perhaps some of the stuff that he's doing is helping to blow it up too. But now his election, of course, his re-election is up in a couple of months, or his reselection or renomination. I'm not sure what the right word is, but and you know, I was talking to Steve Van Mesa the other day, and he said, just remember, you know, Powell is ultimately in the political system, and you know, therefore, what he says is not just economics; it is also politics.
It is, and it's not. I mean, I think it even goes beyond that. Is that he is the sort of PR machine for keeping the markets on track. You know, that is what they've basically built this entire recovery on. You know, it's all about, you know, sort of pumping up asset prices, making sure things are fine. And because, I mean, realistically, if we get a blow up now, they're going to have some rather significant problems.
Well, they'll just do more of the same, won't they? I mean, there is no theoretical limit to how much quantitative easing they can produce, right? Because it just basically lifts both sides of the balance sheets. I mean, it's interesting. If you look at the UK, for example, the Bank of England, 35% of government debt is now owned by the Bank of England. So think about that, you know, assets, liabilities, right? I mean, it's funny money, isn't it?
Well, I mean, we're not really that far behind them here in Australia. You know, you've got the RBA buying, what is it, $5 billion worth of bonds a week, and net debt is only about $730 billion. So, you know, the RBA is buying up almost 1%, well, is what is about 2/3% of all debt every week. Now, when you put that into perspective, like, don't get me wrong, you know, the Fed is buying $80 billion worth of US dollars worth of bonds a month on a national debt of about 28 trillion, which is a lot. But when you contrast the RBA in terms of total outstanding debt, we're almost doing 10 times more than the Fed. And that is just crazy. I mean, you've got to remember that the Fed's former QE programs in the past were only a fraction of what they are now.
That's correct. And of course, Lowe said in one of his earlier conversations that they expected to be about holding 30% of government debt in Australia by October, right? And that was before the latest Delta variant hiatus that are being created. So you'd imagine they'll go on doing it for quite a lot longer, and they'll keep rates ever low. But, you know, like I said, it's funny money. I mean, you're basically lifting one side of the balance sheet, and then you're actually throwing the money across the other side. I come back to the House of Lords report the other week that basically said the main reason why the Bank of England is doing it is not really to help the real economy. The main reason they're doing it is to keep government borrowing costs down as low as possible. Because, of course, if government borrowing costs started to rise, that would be a mega problem.
It's interesting because, I mean, obviously that's what they claim, but I can't help but see the shadows of the wealth effect here. You know, it's about pumping up asset prices to create economic growth because the real economy is so anemic without it. You know, if you take away the enormous fiscal deficits in the US over the last 12 years and you take away the quantitative easing, what would the economy actually look like? Now, I don't think it would really be sort of like the dire sort of stuff that a lot of people talk about when they talk about the end of QE. But by the same token, we would have a much, much more equal society. We wouldn't have, the S&P 500 going to the absolute freaking moon and, all of these various things in place to support that. But, more broadly, I just, QE is just a furphy in my view. I don't think it's anywhere near as important to asset prices as it's made out in terms of the actual, what would you call it, the mechanical nature of things, the sort of Newtonian, A leads to B leads to C. It's more about psychology, because if quantitative easing and buying and the central bank buying bonds would send asset prices to the moon, then Japanese housing would be worth $1 bajillion and the Nikkei would be 50,000.
Absolutely. Well, Japan is a bit of a case study, isn't it? Because they've been at it longer. I think the central bank in Japan probably owns more of Japan than everybody else put together, pretty much. But they really don't have a huge bubble in terms of house prices. They've come way back from where they were some years ago. Their growth rates are relatively low. And in a way, it shows you that mega quantitative easing doesn't actually lead to where a lot of central bankers believe it's going to lead to.
No, it doesn't. But at this point, it's a confidence game. It's been a confidence game ever since 2008. That's only been ramped up even further since the Eurozone debt crisis and then the pandemic. And I mean, if you actually look at the free float of bonds, and what I mean by free float is once you take away the level of bonds that's held by things like commercial banks as reserves, or whether you take away the holdings of central banks, if you actually look at the free float, the actual number of European bonds that are actually on the market and purchasable, it's actually it's a tiny amount, probably less than 30%. And you're talking about trillions and tens of trillions of euros in debt that is basically just, as you say, it's funny money.
Yeah, absolutely. Another example of funny money is the committed liquidity facility here in Australia, where effectively, the RBA is sort of standing behind the banks. But if you look carefully, what the banks are doing is actually effectively betting on each other's bonds. So there's a lot of cross leverage, right, between individual banks. And then, of course, you've also got the other facility which was put in place, which was the term funding facility, which was another close to 200 billion from the RBA, most of which plus more has gone back to the central bank again. So again, it's going around the system. It's funny money. It doesn't necessarily hit the real economy. It doesn't make a lot of difference.
No, but I mean, that's just the nature of the game at this point. It is just designed to prop up broader confidence, and in the meantime, us members of the public are given our baubles and trinkets to keep us happy while the wealthy get more wealthy.
Exactly right. Have another mortgage, sir. Take two, Think of all that property price expansion. Isn't that great, And as the recent government inquiry is now picking over, it's all about supply side problems, right? We're not building enough houses. That's your problem. No, it's not. It's just that's a convenient misdirection from the real issue.
Well, let's just say for a moment that was true. It isn't, but let's just say that it was. If the supply side was the problem and the only problem, then people were being priced out. It was creating all these demographic issues with people not having children later, not having enough dough to consume or to invest in other more productive endeavors like small business. Let's just say that was true. Wouldn't the answer be to then reduce overall demand via any number of mechanisms, like, I don't know, cutting immigration back down to reasonable levels, rather than relying on that to pump up the headline GDP figure?
Well, there's a novel idea, because I'm pretty sure that the first thing they will do once the borders are open is to turn that volume up to 11 and pull more people in, right? Because it's the only lever they've got.
Well, that's the thing now, and one of the things that's perhaps even more concerning now than ever is that the interest rate lever is now effectively broken. They can't do more with it. That's it. And if any more major rate cuts, we're in negative rate land. So basically, the main lever that they've used over the last, say, decade, or decade and a bit now, should I say, it is now population growth. So I think and you're not alone in that view. Louis Christopher from SQM Research is, well and truly on the same page in that respect.
Well, I've said for some time that quantitative easing volume 1 in Australia was population growth, right? QE2 was then, printing money and doing all the things they've done. But plan A is still there, and chances are they will have to do it, because on a measure of GDP growth, the only way to get GDP growth to rise is to bring more people in. Now, GDP per capita doesn't go the same direction. Productivity is still melting and is still weaker than it was previously. But nevertheless, if you want to make a bigger economy, which is where a lot of economists think we should be going, and where a lot of central bankers, believe we should be, and governments, celebrating growth all the time, that's the obvious solution. Just bring more people in.
Well, that raises an interesting question, just talking about headline GDP. Have you seen anything from Treasury or the Parliamentary Budget Office into the long-term impact of stimulus being withdrawn?
No, not a sausage. Very interestingly. That's because presumably they don't think it's a big problem. It's a big issue. I mean, to me, that's... And if you think about the amount of stimulus now relative to last year, it's just worth reflecting on that, right? Last year was a mega amount of stimulus, right? What they've done this year is about a tenth, or 15% of what they did last time around.
On my numbers, as of the latest data, which I believe was sometime last week, it's about 1/6. It's about if you compare federal stimulus for New South Wales between the start of lockdown and I believe Wednesday or Thursday last week, it's about 1/6 of what it was over a corresponding period of a similar duration from the beginning of lockdown last year.
Right. Are you counting state and federal?
No. This is counting super withdrawals. This is counting the business cash flow boost, JobKeeper, the job seeker supplement, which is something that the ABS hasn't counted in their own numbers, but I've gone through and I've done that.
Yeah,
I've actually got an article about it coming out over the weekend, but it's about 1/6 of what it was during last year. But the difference, one of the major differences this time, is that during last year there were businesses off in WA, Queensland, even in New South Wales itself, who were relatively unaffected by the virus, who claimed JobKeeper. Something like $25 billion worth went to businesses who didn't qualify.
Yes.
In the end. So all this money flowed into the economy. All these small business owners, or it flows to dividends if you're a large business owner. But, all this money flowed into new kitchens. It flowed into used cars. It flowed into jet skis. I mean, I know of a 9-second HSV who wouldn't be running nines if not for JobKeeper. So, it's really quite something. And all that money has flowed into the real economy, which is actually the exact opposite of what central banks are doing. But more to the point on this particular issue is that all that extra money flowed around the country. All that extra money went into businesses across the country. And this time, the moment lockdowns end, you're not going to have another $150 billion worth of stimulus to come. It just stops. And then we just go cold turkey. Now, maybe the government will come up with something, particularly because we've got an election coming in as little as, relatively shortly, but as far away as May at the latest. So, what's going to happen? All of a sudden, you're going to have the economy go cold turkey off 1/6 the amount of stimulus, and it's going to be a lot more challenging than it was before.
I agree with that. Plus, of course, the other sleeping figure is the iron ore price, which continues to go the wrong way.
Well, that's an excellent point, because since mid-year last year, when we really started to see the price rise significantly as Chinese stimulus came on song, that has filled so many holes in the federal budget. It has created so much revenue, especially with prices at record highs in Q2 and especially in late Q1. And you're seeing this huge contribution to the federal budget. And that money, that probably tens of billions, I would imagine, over the course of the last 14 months. That money has saved the budget. It's saved its bacon in terms of the ratings agencies. They've mentioned how key the iron ore price is to Australia's AAA, but it's also the fact it's given the ability for the government to do all the dumb crap that it has, like waste money on JobKeeper. But once you take those high commodity prices away, and if this does become protracted, then all of a sudden the government's confronted with a world without that extra 10 billion or 15 billion or whatever it is that they've managed to eke out of it, and they're going to have to start making harder choices.
I agree with that, and all of these forward indications from China is that they're more serious this time about giving the Chinese economy a bit of a shift in a different direction. And if that is the case, then their strategy with regards to steel production is likely to maintain its current trajectory, which is make less, and then they talk about the environment and other things over the top too. So it may well be that this is actually the turning point that, interestingly, of course, in the Treasury modelling, they always said, well, we've got to assume that the iron ore price is going to come back, and every time the iron ore price would come down, X amount, then it's going to have Y amount in terms of the overall economy. So there's a big potential gap. And if it would have come back to, 50 to 75 US, which is probably where the production thresholds really are in terms of the costs, that's a huge chunk out of the budget.
It is, and that's what's really interesting about this current period in China more broadly, because with commodity prices already high, iron ore prices are still well over $100 US a ton for the sort of mid-range content, and you look at that and you think, okay, they're still over $100 a ton. So basically, normally what Australia relies on in times of need is China going to the moon with more fiscal stimulus, with more growth, more building. I mean, they've already got, up to 1/3 of urban homes are empty. They've already got problems with ghost cities and all this other sort of thing. But under normal circumstances, when iron ore is $50 a ton or iron ore is $60 a ton, the Chinese can ramp it up. They can send the iron ore price to the moon, and that's fine. But under the current circumstances, with supplies being relatively tight, with commodity prices already, on a sort of weighted basis across the various commodities, approaching record highs, they can't. They can't just throw another enormous stimulus into the mix without having serious consequences on Chinese households in terms of inflation, and also creating further systemic risks. I mean, I'm not sure if you saw today, but the Evergrande 3-year bonds recently had their trade halted after they dropped 20%, and the company is basically on the verge of default.
Yeah, and that's not a minor company in the Chinese context, is it?
No, I mean they have external debts of over $15 billion in dollar-denominated bonds, and they've got another $300 billion in Chinese yuan-denominated bonds. It is the largest property developer in the world, and they've been in deep trouble for a long time now. But now they're being forced by the Chinese government to sell off assets in order to make these repayments, in order to retain their solvency. But the problem is that that's a game of, what do they say, reducing returns. I forget exactly what the term is, diminishing returns, and that's basically the issue for China. And the problem for Xi is that if he bails out Evergrande, and that's what a lot of people think that he will do, then you're sending a message: do as much dumb crap as you want. It doesn't matter. About systemic stability, the CCP will step in. But that's not the message Xi wants to send. Xi has explicitly said that he wants them, as in China more broadly, to prepare for a black swan event and to reduce systemic risk. And the only way they can do that is to allow people like Evergrande, like Huarong, to default on at least some of their debts, to send a message that, no, we're not going to step in every time one of you gets a boo-boo.
That's right. And of course, it's interesting because if you go back to the US and the Fed, right, one of the things that we've seen there is that no one has been allowed to fail either. Basically through the various quantitative easing programs and support for the financial system, default rates and failures of businesses are absolutely as low as they've been. So in a way, it's part of the DNA of the current economic situation that we're in. But if we get back to real economics, where actually capital is at risk and failures are part of the tapestry, as it were, that's a very different world from where we currently are at the moment.
Well, it's kind of ironic in a way because you watch the American news and they talk about the evils of socialism, and it's really quite funny because they've had socialism for the rich for the last 13 years now. and no one really seems to be all that bothered by it. It's only bad when people can go to the hospital for free.
Yeah.
When you're giving out hundreds of billions in paycheck protection loans to the companies and then forgiving them and just being like, here, have $1 million, have $10 million, have $15 million, and that's all fine. I mean, it just boggles the mind that's okay, that the American people are okay with this, but like I mentioned before, people are happy with their baubles and trinkets.
Yeah, absolutely. Well, talking of baubles and trinkets, you've got a presentation to show us.
All right, the charts that matter for the 3rd of September 2021.
I love it.
All right. First off, we have the official. This is the Chinese government's manufacturing and services PMIs, and for the first time in decades, with the exception of the initial lockdowns, the Chinese services sector is contracting and contracting significantly. Meanwhile, the manufacturing sector is in slight contraction, which is really something considering the enormous demand that's currently going on. But being a diffusion index, it doesn't really mean a whole lot. Just that basically demand, that production and demand are roughly sort of flat at the moment relative to where it was last month. But the thing I find really interesting about this is that this is official Chinese government data, and not only that, but the market and analysts were really surprised by how poor it was, which I find surprising, but apparently, it's really been quite interesting because analysts keep being surprised to the downside and they're just not getting the message.
Well, it is interesting to think that, as you say, it's official data, right? So in other words, there must be an official blessing to show this sort of result, which suggests they want to signal something.
Exactly. I completely agree, and that's something as well that they're very, very carefully managing the moment. The Chinese government, they're starting to censor negative things that people say about the economy online. So it's very clear that they're trying to massage the narrative in a very, very specific way. Now, I have my theories as to what exactly they're trying to do, but at this point, that's pretty much all they are. I think that they're just trying to manage this deceleration in credit and trying to manage this, I wouldn't quite call it a deleveraging, but sort of like a disleveraging. And they're attempting to grow their economy faster than they grow their debts. But I'm not really sure how successful that's going to be in the long term. Okay. This is the Caxton PMI, which is a composite of both the services and non-services industries, which is basically most of the Chinese economy. And this is now also showing that even when you factor in manufacturing as part of the broader economy, it's not looking fantastic. It's rolling over. And once again, this also surprised analysts to the downside. And they're just not getting the message that Xi has other ideas in mind for the Chinese economy.
No, I'll make a comment on that. It was quite interesting how a lot of the commentators didn't really, I think, understand what's going on with these numbers, right? Because there are quite a few people who sort of follow China but don't really follow China that well, and I think they've missed the really important signal that this actually represents.
I think one of the interesting things with China is that they really signal things generally quite far in advance. Like everything that's going on now with tech sector, with the education sector, they signaled that a couple of years ago. No one took them seriously, but they did. But they did give that signal, and sometimes you sort of see that in some of the way that things play out in Chinese stocks. As you see these companies get sold off for basically no reason, and then a couple of hours later there'll be a statement or an article or something from Chinese state media, and then all of a sudden it'll all become clear.
Exactly.
Okay, this is the Evergrande one of Chinese bonds that we were mentioning earlier. This is the chart for the 5-year Evergrande Chinese bond, and it's, as you can see, it has absolutely plummeted. Now, for those of you who are perhaps not familiar with how bonds trade, to see this kind of deterioration in the value of a bond is basically quite often terminal. You don't generally see a company come back from their bonds being devalued this significantly. Now, don't get me wrong. There are times when there'll be like a haircut, 20, 30, 40%. But when a bond, and not only that's deteriorated further since then, but when a bond loses, 75% of its original value, you know that the company is in deep, deep trouble. And Evergrande is definitely relying on a big bailout from Beijing if it is to continue.
And just making the point, of course, that price of bond and the implicit interest rate goes the other way, right? So when the price drops dramatically, then the implicit interest rate, in other words, the risk premium on the bond goes through the roof. So basically people are saying, whoa, there's a lot of risk here.
Yeah, absolutely. Now to the US, we have this is the University of Michigan index for basically just how consumers perceive buying large goods, houses, appliances, vehicles, and across the board. If you take a wide view across the board, it's basically the worst time in decades since the high inflation of the 1980s. Oh, actually, I believe it might even be the late 1970s at this point. But suffice to say, consumer sentiment towards making a major purchase is absolutely collapsing as a result of both inflation and just really concerns about the future.
Yeah, and that was, again, quite surprising. A lot of people weren't expecting that, right? Because the consumer is a huge part of the US economy. It's, 2/3 of the total contribution generally. So the fact that now people are thinking, maybe not as a good time to buy, that's very significant.
Yeah, exactly. It's something that is really, this is something that I imagine Jerome Powell is looking at behind closed doors and using as part of his justification not to taper. Because, if this sort of, downside scenario that American consumers are seeing is realized, then, things could get interesting, to say the least.
Well, it is interesting how the Fed has a bit of a bipolar behavior, right? So there are some members of the Fed who are saying, no, we should be tapering quickly, right? Whereas Powell and a couple of others are saying, no, we aren't there yet. We've got to wait for the signs. And as the signs come through and look a little less positive, you think it just pushes the tapering question out and out and out, doesn't it?
Honestly, I don't see them getting to taper, to be completely honest with you. I think that basically they're going to talk a big game. There'll be announcements of tapering, or perhaps even a timeline of tapering, and then it'll be, oh whoops, the economy isn't doing as well as we thought. And obviously that particular scenario could be complicated significantly by inflation continuing to come in stronger than they expect, particularly if rents feed into the CPI very, very strongly. But I don't know. I just don't know if Powell has the balls to take away the cookie jar from the market.
Well, he hasn't proved that he has so far. And of course, last time they tried that, the markets won, and quite quickly, didn't they?
Yeah, they did. And I just have there's quite a lot of commentary, even from the likes of the big investment banks, that basically if you see a big 10, 15, 20% drop in the S&P 500, that Powell is going to bulk and, even though that has completely got nothing to do with anything in the real world, it doesn't really matter. It's all just, like I keep saying, it's a confidence job. Now, this one I find really, really fascinating, because there is a spread between the Conference Board Consumer Confidence Index and the University of Michigan survey. And from what I understand from speaking to people who understand this far better than I do, and have been looking at these indices for decades, is that the University of Michigan Consumer Sentiment Index is generally a lot more accurate in terms of how consumers are actually perceiving things, while the way the questions are weighted for the Conference Board Consumer Confidence Survey is more a case of people parroting back what they've already heard about the economy from friends or from the media. Now, when the spread between the Conference Board figure and the University of Michigan figure reaches a height, that tends to be the end of an economic cycle. As you can see, in the early 2000s and also just before the GFC, it showed that the large spread showed that basically things were about to roll over. And that also happened again shortly before, just as the pandemic hit again. And now we're seeing a similar issue play out. And as the University of Michigan figure craters, you're seeing that spread blow out. And, it's been quite a solid indicator of a coming recession or difficult economic times in the past. And while Delta may be playing a relatively large role in that, one, that's not what the analysts on Wall Street said prior to these various data bits being released, but now it's a convenient scapegoat. But I think that inflation and just broader concern about the future is really just creating some problems for American households.
Yeah, and it's worth highlighting, I think, that there's been a big swing over the last little while, with regard to what the Delta might mean for the economy in the US, particularly with some states having big issues. And then, of course, we had the storms come through and, hit the South and then even hit New York. So there are a few factors in play. But I was reading stuff today from a couple of the analysts saying, I think this is all overdone. I think, the markets will maintain their trajectory into the future. There's nothing to see here. The tapering will come, but it won't come quickly. The Fed will go on doing it, and therefore the markets have more headroom. But any of the critical leading indicators that I look at, and this is a very good one, sort of goes in the other direction. So I'm looking at it rather differently from a lot of those other analysts.
I'm looking at it very differently in terms of the economy. Absolutely. I think the US economy is going to perform quite badly, mostly because confidence is rolling over because of inflation, but then you're also going to see all these enormous levels of supply chain issues impacting the availability of goods. And, say, for example, a laptop or another product can't contribute to GDP if it doesn't exist. And if, these various supply chain issues are preventing these things from existing, most notably in the auto sector, a car that doesn't exist can't be sold and then contribute to GDP. And that's going to be a really, really significant factor going forward. I mean, you've even got Kamala Harris, who's the vice president, telling American consumers to get their shopping done early because there might be shortages.
Absolutely. And this is interesting. If you look at the GDP components, people haven't realized that one of the upside components at the moment is all the healthcare spending and all of the related expenses, all the importing of vaccines and things. That's had a really big positive impact on GDP. So, because GDP measures any activity, it doesn't be good or bad, indifferent, right? So that isn't really a sustainable picture for the future either.
No, it's not. And just a little interesting factoid about GDP is that within, I believe, the last decade, it may be longer depending on the country, but now illegal activity is counted. If you've got an illegal brothel, or if you've got a drug dealer, or if you've got any number of other illegal activities, it's all counted towards GDP because, that's a nice little way to massage a little bit more growth where there is none.
Exactly right. And bearing in mind the amount of money laundering that goes through the banking system, that's all positive too to GDP. Work that one out.
Pretty much. And even the recent Australian GDP figure for Q2 that has been, lauded by Josh Frydenberg, to the point where it's made me nauseous, is that if you actually take the inventory build as a result of vaccines and other medical equipment out of that, and you take out the big farm inventory build, which occurred because we've had quite a lot of good rain, and even had the drought breaking in certain locales. If you take that out, GDP growth was only about 0.2% for the second quarter. And then if you even go even further and you strip out the actual the housing transactions, which is the stamp duty paid to the state governments, you basically end up with a nothing burger in terms of growth.
Absolutely. Well, of course, the home builder programs and all of the refinancing and all that stuff is in there too. But, it's all artificial, isn't it? It's not really a fundamentally firm platform on which to build an economy.
No, because, say, for example, you used to just see housing demand drop off just, organically because these things work in cycles. And then all of a sudden, you're seeing GDP start to fall as a result. And it's just, I don't know. I don't personally like GDP as a measure, but unfortunately, it's just the one that central banks and pretty much everyone else just decides that we have to have.
You mean economists who know everything, of course.
Yeah, the same economists who keep getting things wrong and wrong and wrong and wrong, and I don't know. I've got a nice little chart that illustrates that coming up. Now, this is an interesting one. Now, the Fed actually doesn't use CPI as its chosen inflation indicator. It uses what they call PCE, which has some slightly different weightings, and the reasons for that are relatively long and relatively boring. But suffice to say that is the one that they watch. And core PCE recently came in at 6.1% year on year, which is just, well, you don't need to be a rocket scientist to know that 6% inflation is bad. And the concerns about inflation and the Fed driving inflation are really starting to feed into the US political system. On the left there, I have a little excerpt of an article by West Virginia Senator Joe Manchin, who is basically the gatekeeper of further stimulus spending. With a deadlocked Senate as it is, and with Kamala Harris being the deciding vote, if any Democrat senator like Joe Manchin or Kristen Sinema from Arizona dissent, they can't pass the bills. They can't pass the stimulus. And Joe Manchin has made it quite clear in this piece in the Wall Street Journal that he believes that inflation needs to be taken into account before they do more stimulus spending. And I think it's also important to keep in mind that this current round of stimulus spending that they're discussing in Congress isn't like the other ones that we've seen with the CARES Act and the Biden stimulus that we've seen more recently. It's spread out over 10 years, so the inflationary impact will be much, much more muted than it would be when you throw another $3 trillion into the system. This one's only about 350 to 500 billion over the first year, so it's not. Well, it is a huge amount of money relative to the rest of history, but compared to the rest of the past, 12 or 18 months, it's not that much money. So, yeah, I think it's really something to keep an eye on, especially with Biden being radioactive because of the complete fast in Afghanistan.
I like the term radioactive. Yes, he has blotted his copybook well and good to that, hasn't he, unfortunately?
He has, and that's going to really complicate things going forward, especially because of the way the American political system works. You're going to see American politicians are going to be, congressmen in particular, are going to be in primary mode, which is where the different people from the same party all compete with each other for the party's nomination for a congressional seat or for a Senate seat. It's not like in Australia where you've just got the local members all rocking up and, for a luncheon and then you all just decide. It's a much, much more involved process. So these primaries, the actual dates are as early as February and March next year. So people are going to start campaigning to retain their seats as early as probably November or December. And the fundraising for those efforts has no doubt already begun. And that's one of the downsides of the American 2-year congressional election cycle. So that really complicates things for Biden because these people are not going to want to be seen cooperating with him on these things while he is struggling so badly in the polls and with his approval rating because they don't want to be associated with that. So that's really added an extra dimension to all of this that wasn't there before.
Yeah, well, I've always had this theory that with the American system, you basically only have just a few months after each election to do anything because then you've got to fight the next battle and the next battle and the next battle. So it's a really quite weird system.
It is. I reckon it's probably 9 months tops in terms of actual clean air every 2 years, if that. More so. Less so if it's a presidential election year coming up.
Yeah.
Okay. Now this is what I was talking about in terms of economists getting it wrong. This is the Citibank Economic Surprise Index, which is basically just how analysts are surprised or not surprised, whether they're surprised to the upside or surprised to the downside. And as you can see, they've been surprised to the downside quite a lot lately, and they continue to get things wrong. Time and time again, they continue to think that things are going to come out better than they actually are, and they unfortunately, fortunately or unfortunately, depending on how you see it, they're just not getting it right.
Yeah, interestingly, I think if we had a similar chart here in Australia, it would probably be even worse. Actually, of course, economists keep changing their tune anyway because they try and then sort of fit a new set of views to what's going on. But generally, don't really help much, do they?
Well, in Australia, I find that some economists just make every prediction. And if you make every prediction, you're at least always partly right.
Exactly right. Well, it reminds me of my favourite joke from somebody who used to be at APRA, who basically told the story of people duck shooting, right? And there was an economist included in this party who was sitting in the boat, right? And he fired ahead of the duck and he fired behind the duck and said, "Net, I hit the duck."
And that's part of the reason why these people probably shouldn't be making decisions for us.
Yep, here.
Okay, this is the auto inventory sales ratio in the US, and it has dropped to, well, I'm not going to even bother saying decade lows. You can all see how poorly that's working out for them, and the drop off in auto sales could really cause some rather large problems in Q3 and Q4, particularly if this chip shortage isn't resolved until later next year, which some people are talking about potentially lasting into 2023. So, as we previously discussed, you can't sell an item that doesn't exist, and that doesn't contribute to the economy.
Absolutely. I love the title of that slide. It is absolutely a truism. Well, if it ain't there, you can't sell it.
No. Well, unless it's an NFT.
Now could that be the solution to the GDP problem, right? Just sell things that aren't there.
Well, I mean, I suppose Dodge could, sell a picture of a Ram, or Ford could sell a picture of a Mustang, and it can later be exchanged for a real car. There's an idea.
Hey, I think you've just created an innovation there that's worth thinking about.
You'll have to cut that little bit out, Martin. We need to monetize this.
Yeah, exactly. Patent it quick.
Okay. Now this is a probably, if not the most important chart, one of the most important. It shows what the velocity of money is doing. Now, the velocity of money is basically how many times that dollar is spent in the economy as it flows around. As the barista goes to the personal trainer who goes to the lawyer, and the lawyer who goes to the mechanic, and so on and so forth. Now, one of the biggest problems with not having items with having these supply shortages and having these issues with supply chains, is that if the money's not flowing through the economy and the item isn't there and it doesn't exist, then that has an outsized and disproportionate impact on the economy. Whereas if you did, for example, you had a shortage of cars, and when money velocity was peaking in the late 1990s, you'd still have all these other activities going on as the vibrancy and the strength of the economy overrode those issues. But under the current circumstances, where things are so weak, it may have a more significant impact on the economy and on headline GDP as a result.
And it's interesting, if you were to overlay on that same chart the growth in the Fed's balance sheet, right? Or if you were to actually do a deviation between the two, the other side of it is that, growth in the Fed's balance sheet is going up precisely at the point where effectively the velocity of money has collapsed. And you could begin to hypothesize maybe those two things are also linked.
Well, there are some rather interesting theories and studies going around at the moment. I believe Bloomberg referenced one recently, that basically that the growth in the central bank balance sheet and the growth in inequality that it's caused is basically one of the reasons why money velocity is collapsing, and one of the reasons why growth is struggling so badly, because basically you're slowly sucking money. As the financialization of the economy continues, it just sucks more and more money out of the real economy and out of the middle class. And that's something that we've seen here in Australia. There's a reason why real household disposable income per capita has basically flatlined shortly after the financial crisis, up until recently, when the government started pumping in the hundreds of billions in stimulus.
Absolutely. Well, in fact, if you then overlay the reverse repo, which is the other part of the story, which is basically, Fed throws money into system then throws the money back to the Fed. Well, the reverse repo is it's where it sits, right? And so that's another reason, because it doesn't go to the real economy at all. It just goes in the financial system, and it just goes backwards and forwards, right? It doesn't create real economic activity. Hence, velocity falls.
Yeah, exactly. I think it's like, yep. And that's it for today.
Terrific. Well, that's really fascinating. I love your charts because what you've been able to do is to tell her a really interesting story with some charts that perhaps a lot of people don't necessarily come across. And it really does underscore the fragility of the way the economy in the US and in China, and indeed in Australia, are facing. And I guess then if you interface that with the other thing, which is the Delta and what's going on, right? Now, of course, the narrative in Australia now is that by October and November we'll be through, right? Everything will be back to normal, everything will be open, and we'll be cooking with gas. Doesn't seem to me to be quite that simple.
Well, as we previously discussed, the level of stimulus and also the level of latent stimulus, that's going to flow through afterwards is obviously going to be a lot lower than it was last year. So that's obviously going to be like a rather stark contrast to the way it was, sort of this time last year. But I think one of the key things in all of this is that I think there is a lot of issues out there that aren't really being taken into account. We're not we get to see the real impact of not the real impact. We get to see a very major impact of inflation here in Australia. It's not like the US. We haven't seen everything explode higher to the degree that it has in the US. Now, how long that will take is obviously an open question. But if we do start to see these issues like supply chain disruptions, once again, you can't sell what you don't have. And that's something that's already impacting the construction sector significantly. So, if we do start to see these issues feeding into the economy, and not only that, if we do start to have more issues with Delta, with all these other problems, I think, to be completely frank with you, I think it's rather stupid making all these promises to people, especially after you've promised them these things over and over and over again, only to just pull it away from them. To wave it in their face and then take it away. I think it's a really, really silly thing to do. And there's no guarantee that things aren't going to change again. I'm not saying that is what will happen, but that is what happened with Delta. At the start of this year, we were promised that everything was going to be fine, that, that towards the end of the year, people were going to be vaccinated and everything was going to go back to normal and we could all go traveling and everything was going to be great. And then they took that away from us. And people are pissed. And they have every right to be angry. And I just don't think they should be doing that again. And especially, there are some concerning studies out there as well. There was one out of Qatar that I posted on Twitter the other day that said that after about 5 months, that the efficacy of the Pfizer vaccine against preventing an infection is basically nil. Now, don't get me wrong, it still prevents serious illness in 72% of people, but that's a rather concerning number. It basically means that you're on the vaccine booster, a merry-go-round forever. And how exactly are we going to factor all that into our calculations, into reopening, into all these other different things? I think there are a lot of these unanswered questions. And I'm not necessarily saying that there's going to be, bad things are going to happen or things aren't going to play out the way we want them to. But by the same token, I'm not the Prime Minister of Australia. And I'm not promising people something that may not exist. And, I think that's the crux of things.
Well, I just go back to one of our earlier conversations. It was late in last year, right? So late 2020, when everyone was saying, well, 2021 will be so much better, right? And we both said at the time, well, hopefully you're right. But, there are a few questions that we've got, right? I would say precisely the same. I hope they're right, but there are so many variables and so many ifs and buts and ands that, a more realistic, more balanced view, rather than political spin view, would say, well, yes, this may be right, but, on the other hand, it may not be. But again, it comes back to spin and psychology rather than actually anything beyond that, doesn't it?
It does. I understand to a degree, the government needs people to be confident. It needs people to go out and spend. Otherwise, they're stuffed. I get that. But by the same token, we are reaching the point now where a lot of people who are just regular everyday folks, they're not like you and I who follow politics very, very closely. They're just regular everyday folks, who are getting very, very angry. They're just people who want to be able to take their kids to the playground. They're people who just want to go overseas and see their parents or their family or their friends, and they're angry, I just think it's really, really a dangerous thing to do, to promise people something that they may not be able to deliver. And, if you had a set, I mean, I think it's funny. I think one of the great examples is about less than 3 months ago, 2.5 months ago, Scott Morrison was talking about shelving the AstraZeneca vaccine forever as of October. That's what he talked about 3 days before Greater Sydney went into lockdown.
Yep.
And now it's over 60s, you better get vaccinated, otherwise you're going to go to the back of the queue when it comes to Pfizer. Now, one, that's freaking stupid because they're the most vulnerable people. And two, seriously, mate, with the mixed messages, I mean, and it's just this movement of the goalpost. Now, I'm not saying that Scott Morrison's the only one who's doing it. Dan Andrews, Gladys Berejiklian, Anastasia from Queensland, Mark McGowan, all of them are moving the goalposts. And I just think that needs to stop. I just think that there needs to be honesty about the situation. And here's something, that this probably come back to haunt me, but here we go. I was very, very impressed with Scott Morrison at the start of the pandemic when he talked about the levels of uncertainty. When he said that, with our timeline is 6 months, this is what we're planning for, and we have no idea what's going to happen. We're just going to do our best. We need the nation to come together and just, support each other. And I thought that was fantastic. But that pretty much died within about a month. And now here we are, promises and political spin.
And I have to say that, some of the media is actually not helping because they keep asking for certainty when there is no certainty, right? And by definition, politicians are not going to turn around and say, oh, we don't know, or it depends, right? Because that just gets them into more difficulty. So in a way, the daily press conferences and all of the sort of the cycle that's currently in train, to me at least, is actually creating more heat than light when it comes to this, right? And, you can almost guess the questions they're going to throw, and you can almost guess the answers that are going to come back. So the whole thing has become a bit of a pantomime, in my view.
Yes, and it's rather frustrating that they keep inviting these same people back with their same dumbass questions at times, to be completely honest with you. I mean, don't get me wrong, there are some fantastic journalists at these press conferences who ask very, very important questions, and I'd say that, that they were probably in the majority. But there are people there every day fishing for these gotcha moments that are going to make these headlines, and that's not what we need.
No.
We don't, there is no certainty. Accept it, live with it, move on with your life.
Yep.
And I know that it's hard as a human being, that we're used to having some level of certainty. The sun is going to rise tomorrow. The moon is going to be out tonight, whatever. But that doesn't exist. And I think that giving people the promise that it does is just freaking stupid. Yeah. I mean, we had this conversation last year. We had this conversation this time last year. We said you need to be careful about the virus. There could be other variants. Everyone's like, no. The vaccine's like 90% effective and there's not going to be any problems and everything's going to be hunky-dory. And we were right. And we got labelled doomsayers for it, but we were right. And I just think we need to have the same level of caution, just in case, because that's what it takes to run a society. You can't keep promising people something and then taking it away.
Yeah, well, the reality of existence is it's on the knife edge pretty much all the whole of your life, like it or not, right? Now, I know people don't like that, and I know people want certainty, and I know they want to go back to what it was like before, but the reality is that, there are a lot of unknown unknowns. We know we've got the South African new variant bubbling up, which doesn't necessarily seem to work the same way as some of the others, and so therefore the vaccines might not work. We also, as you say, have that decaying question in terms of the efficacy of the vaccines over time. There's a bunch of other questions too in terms of the economic fallout, as you've discussed. So I think, the right story would be a much more cautious view. But I wonder whether it's because of the polls, and you mentioned the election, right? I still can't help but think in the back of the politicians' minds, those two things play very heavily in terms of the way they do things.
Well, that's the theory. I mean, there was an article in the New Daily a few weeks ago by Michael Pascoe, and he hypothesized that the reason why ScoMo is pushing this narrative of, reopening of all this other stuff is because he wants a November election, because he wants to take advantage of, the best possible conditions of the vaccine rollout, of warmer temperatures, of all these different things to create the best possible image of Australia going forward. Because, without all that extra stimulus, and I mean, even CDA came out the other day and said that this recovery is going to be a lot more challenging.
Yeah, absolutely. Which means you don't really want to be fighting an election next May when, some of those things will have come through. So there could be a window of opportunity, November time, right? Because by then the vaccination hurdles will have been hit. There'll be some opening up, and the effect of the opening up won't have flowed through yet because it takes a bit of time to work through. Look at the UK and other places too. So there is that little sweet spot, that window of opportunity. And now, of course, with the extra 4.5 million Pfizer vaccines they've managed to magic out from Singapore and elsewhere, I think from the UK most recently, it's given them a clearer road to the November election.
Yeah. Yeah, if you had have asked me that would we have a November election 2 or 3 months ago, I would have said no. But here we are. There's things are changing rather rapidly, and I mean, not only that, but if these supply chain issues do continue well past well into next year, I mean, I don't even know what things are going to look like. I mean, I don't think anybody does. I mean, I've read some rather dire predictions from people who are experts on logistics and shipping on a global scale, but I mean, it's all just really up in the air, and I think that sort of needs to be taken into account. So, for Scott Morrison, I think taking it to an election is probably, probably his best choice at this point. Particularly, if he can somehow find a way to capitalise on, the current level of, what would you call it, disagreement within Labor over how to manage things.
Exactly. I was going to sort of close on that point, which is actually, of course, if you look at the other side of politics, they're in somewhat disarray at the moment for all sorts of reasons, not least because there's a fundamental disagreement on some pretty important policy issues. That ain't going to get shaken out anytime soon. So going early is actually also perhaps an advantage there too.
If he could make that argument, definitely. I mean, on paper, he faces a rather large uphill battle. I mean, especially if you look at, say, even like the Roy Morgan polling, where they're very, very far behind. But I think Australians have a relatively short memory when it comes to these things, and if he can deliver a relatively decent outcome towards the end of the year economically, I think that's going to be a pretty big thing in his favour. I mean, I'm not calling it one way or another at this point. It's still far too early to call, but I think it could be close. I mean, I said last year that it would be a lot closer than people thought, and people thought I was nuts that ScoMo was going to walk it. But I still hold to that. I think it's gonna be close.
Well, this is interesting because, of course, the 4th of September New South Wales council elections got kicked out to the 4th of December, right? Because that would be a super spreader event. So, I wonder whether they can have a national election later in the year if things are actually better, I guess, or it could be a super spreader event. Who knows? Well,
I mean, let's hope that that things work out for the best. I mean, November is going to be a relatively. I mean, some of the modelling I've seen that takes into account the impact of the vaccine suggests that case numbers should be trending in the right direction by then, well and truly. But we're just going to have to wait and see. I think that's really the order of the day.
Absolutely. Well, Tarric, as always, very interesting conversation. And, I think the message for those listening to this conversation is, watch the, the mixed messages out there. There's a lot of uncertainty, and anybody who's sensible will actually, just understand that there is a considerable amount of it may or may not happen, this or that, rather than actually saying for certain it's going to be perfect by November.
Agreed. And I think what the key takeaway in all of this, whether it's China, whether it's the US economy, or whether it's the federal government here in Australia, watch what they do, not what they say. Because they say a lot of things, but then they don't end up coming true. So just watch what they do. Absolutely. And remember that they probably will have already announced what they've just announced again previously, right? Particularly as it comes towards an election. That's one of the other things I keep account on, right? Which is how many times they announce the same thing as they've already said. So that's something else to watch too. Oh, it's fun, isn't it, Tarric? I suppose you sort of have to get some sort of twisted sense of enjoyment out of it, otherwise it drives you nuts. Twisted sense of enjoyment. Yep, I think that's about sums up. Tarric, appreciate your time as always. Thank you. We'll do it again soon. No worries, mate. I'll catch you later. See ya. Take care. Bye.